Hi, I'm Tim Sustak, Chief Treasury Officer with Vizo Financial, and this is your FOMC update for the June 2025 meeting. At its latest meeting, the FOMC chose to maintain the target Fed funds range at a level of 4.25 to 4.5%, and they also maintained the rate and reserve balances at a level of 4.4%. The decision was unanimous and expected by the markets. The post-meeting statement changed somewhat, particularly around the Fed's outlook and the balance of risks. The Fed acknowledged that uncertainty around the outlook had diminished but remains elevated. Also, the language indicating the risks of higher inflation and rising unemployment was removed from the statement, with the Fed simply saying they were attentive to risks on both sides of the dual mandate. I think the Fed is feeling some relief, as we all are, that the tariff situation is not currently as tense as it was during their last meeting. It's the end of a quarter, so we also received an update of the Fed's Summary of Economic Projections, or SEP for short. We'll start with a dot plot, which showed the Fed still sees 225 basis point cuts before the end of 2025, as they did in their March projection. However, they do see rates a bit higher in 2026 and 2027, but only by about a 25 basis point increase each year. It's interesting though, there seems to be two camps forming around the outlook for rates, as 7 of 19 participants see no cuts in 2025, while 8 of 19 participants see 225 basis point cuts. Time will tell who is on the right side of that. Other projections showed the GDP growth estimate for 2025 fell to 1.4% from 1.7% in March, while the PCE inflation estimate increased to 3% in June from 2.7% in March. We'll see if Chair Powell had any more to say about the Fed's outlook in his press conference after the break. Welcome back. Chair Powell gave his prepared remarks to start the press conference. He said that although there is still elevated uncertainty in the outlook, the economy is in a solid position with the labor market at or near maximum employment and inflation a bit above the committee's 2% goal. The elevated uncertainty stems from a number of factors, including changes to trade, immigration, fiscal, and regulatory policies. The tariff concerns were at a peak in April and have since eased somewhat. The effects on inflation still have yet to be seen and will likely push up prices later in the year, though the impact is still too uncertain to quantify. Chair Powell explained that the Fed's job is to keep inflation expectations well anchored and prevent a one-time increase in the price level from becoming an ongoing inflation problem. In the question and answer session, I think the main theme that stood out is the Fed, as well as many other economic forecasters, see tariffs impacting inflation moving forward, and because of that, the Fed is in a wait-and-see mode before making any rate adjustments. They are afforded that luxury because the economy, though having slowed somewhat, is still strong and stable by most measures. As he usually does, Chair Powell downplayed the Fed's economic forecasts, and particularly the dot plot, saying that there is so much uncertainty in the economic outlook that none of the Fed members have much conviction about the rate path moving forward. He indicated that the summer months will likely provide valuable data on the effect of tariffs, given it takes some time for tariff effects to make their way through the system. And monetary policy is in a good position for the Fed to wait and see how the situation plays out. Chair Powell said the committee feels like a somewhat restrictive monetary policy is a good position to be in given the expectations for tariff-related inflation. So, pretty much the same story as before. The Fed has the opportunity to wait and see what happens regarding tariffs, and it's an opportunity they intend to take. Hopefully, the summer months will give us some additional clarity where tariff impact is concerned, and the future path of interest rates will come into better focus. Until then, uncertainty continues to be the order of the day. That's the FOMC update for June. Thanks for watching, and be well.